Hey everyone, Sterling here. We got a nice trade opportunity on the pound yen, and I wanted to throw on the recorder. I've taken a long from 45 on the pound yen, um, and just want to quickly walk through the real reason for the entry. In the daily market review, one thing we were pointing out is that as a couple possibilities with the pound yen is a pullback to pull back a little bit deeper. The market pulling back uh, against the move to the downside. And at this point, the 200 EMA was a little bit above the daily pivot, and we'd also had a point over here where it was a previous support area. That support came back up, turned into resistance. So it's an area that the rest of the market's going to be looking for because that tends to be a point that stops the price. With what seems like a decent level of consistency. Now, looking at those points, we look at those points because again, that's where smart money will try and manipulate the market around those points. And if the market had worked up here out of the Asian session, more than likely we'd have the 200 EMA right around the daily pivot, as well as that previous support area that then turned resistance. So what I was saying is, if we get a pullback to that point, it could be a good opportunity to look for a topping formation or a stop run. Well, we never got a pullback to that point, but we have had again had an initial break lower. We also talked about the fact that what they'll do is they'll reverse the price going into New York and then continue the overall smart money trend. Now we did have a topping formation here on the pound yen, and it gave a decent opportunity short. I did not take that one. Um, I know Chad is in that entry, and it gave up a decent amount. Gave up 93 pips to the downside, 95 pips. So again, how large of a move are we generally looking for? If you caught that move down, and now you're seeing the big stop run, you got to start asking, okay, is it time for me to get out of that move, take my profit? If you hadn't taken the profit, it has moved 90 pips. So if you haven't taken the profit, well, maybe you're being maybe you should be a bit more wary of the 90 pips, how it generally tends to move that way. But the final part to that is really saying, hey, you should probably be looking to get out of this trade, if not reverse it. Was the fact that we had this clear established low right at the S2 pivot. Again, pivots tend to be a point people look for. And then we see the manipulation through that point, blows through that low, big stop run, comes into a psychological barrier, big rejection. We may trickle down a bit, but they tend to hold the price around a stop run, or they will on occasion hold the price on a stop run for a little bit longer. A lot of times with a stop run, it's immediate reversal, but there's times where they'll hold it for 30 minutes, an hour, and they'll hold it in that range to get people thinking, oh, you know what, maybe that wasn't a false push below that low. Maybe it really is going to continue down to or continue to the downside, and that's just again more of the trap being set. So whenever I see the price just stall right at that stop run or right at that point, and they don't really try and make a move down, but they don't try and make a move up, that to me is just screaming, hey, they're holding that price there to get traders believing, you know what, maybe this thing's going to drop again. Maybe this thing's going to drop, and maybe that wasn't a false push down. So whenever I see him holding it there, it gives me even more confidence that the stop run is truly going to hold, and that's what I'm counting on here. Again, we are against the overall smart money trend. We've had what looks like a first push down and a second push down. This the reason I'm not calling this a third push down as of yet. I mean, it could end up being that way, but the reason I'm not is because it hasn't been spread out over a long enough time period. Yes, you have. Let's see here, moved 250 pips, so we've moved a week's worth of movement, and it's possible that we've caught that reversal. We'll have to wait and see. What would make me consider holding this for a longer period of time? And again, the time factor is it's much like anything else. It is a general rule of thumb. This is generally how they move the price. So we're shy of the time factor by about half a day or 24 hours, generally moving at least 3 days. But with that being said, if I see the market pull off this stop run strong to the upside and accumulate near its highs it sets, well, you know what? I'm probably going to chance it. And I'm probably going to hold that in expectation that may very well be the midweek reversal. If that is a midweek reversal, then we're going to see a decent run back to the upside uh, on this pair here. So, anyways, guys, some decent opportunities. I'm not going to get into the euro or the pound. Some decent looks at that as well. But we'll get into that a little bit more in the daily market review. So what we'll do is we'll go ahead and pause the video, and again, like I just said, come back when we've pulled off these lows, and possibly either exiting the trade, or discussing how I'm going to manage the trade once we have a little bit more information on how it's going to develop. So I will be back short. All right, guys, we're back on the pound yen. I'm going to be closing this trade here. It's about plus 40, 2 to 1 on the original entry, and the reason I'm doing that, and the reason I'm closing at this point is with, I talked about possibly holding it for a little bit longer period of time, but for me on the pound yen and the way that we've seen these really drug out accumulation areas, I would feel more comfortable because I may not be around for that manipulation. I feel more comfortable taking the profit on this trade. It may end up running off without me, but you know what? I'm happy with a 2 to 1 trade any day on the pound yen, and I will still be, again, until proven wrong, we'll be looking for the market to be reversing. We've seen what looks like the third push to the downside. Feeling more confident in that, and the fact that we have pulled off those lows and entered into accumulation. So the expected thing is that manipulation move down before the next push up. But again, that's our belief. Until the manipulation confirms it, it's not a confirmed, it's just an opinion until the manipulation confirms it. So again, that's why I'm playing it a little bit safer here and just taking the exit on the trade. So hope this video is helpful, guys. I hope the points in this video, tracking where you're at in the overall cycle, the fact that each of those moves was moving at least 90 pips, the fact that at the end of that possible third push, we had a huge stop run, really giving a strong indication that the market was in fact ending that final push to the downside. So again, hope this video is helpful. If you have any questions on the video or the reasons for the entry, reasons for the exit, whatever it may be, we'd be happy to answer any questions. So feel free and post a comment below the video, and be happy to get back with you on that. All right, guys, until next time, happy trading.